Hello students, we are going to discuss the Indian economy questions in the UPSC Prelims exam in 2025. The segment of the Indian economy is around 20%, which plays a pivotal role for the UPSC aspirant. The main philosophy of the UPSC Indian economy is the core syllabus which they mentioned, as well as the basics, what extent students knows about the basics. Even current economy related questions also reflected in the preliminary exam. It depends on the logical conclusions of the basic concepts and as well as what the student understanding about the basics of the economy that clearly reflect in the UPSC prelims exam. So I always say in my classes, student must clarity on the syllabus, student must clarity on the concept rather than reading individually the content as well as the material and as well as practicing in the various tests. Until unless you are not having the clarity on the concepts, pretty difficult to the individual aspirant to be eliminate the wrong answers from the questions. So NCERT again plays a crucial role in the UPSC prelims exam. So who are preparing for the next year and who are already written well in the prelims exam, just again reiterate the basic concepts of the Indian economy as well as current related issues. So in this question paper, fiscal policy given a huge importance and as well as capital market rather than given importance to the RBI and monetary policy. Because all of you know UPSC is an unpredictable the strategy. So let's begin with the fiscal policy questions. See the question number 1. So see the question number 1. Suppose the revenue expenditure, because the question relates to the deficits. All of you know in the fiscal deficit or in the particularly in the budget we have the number of deficits: fiscal deficit, revenue deficit, primary deficit, effective revenue deficit. This year they have given importance to this fiscal deficit, revenue deficit and as well as the indicators of the fiscal policy. See the first question relates to the the revenue deficit, fiscal deficit, primary deficit. The question is very clear, but numerical answers, the numerical answers. After a long period of time again they have restarted these numerical the answers. So it clearly indicates that UPSC is ready to test you even in equation, even in the numerical values. So you should learn all these aspects while you are reading the basic Indian economy syllabus. So friends, here see the revenue expenditure he has given so and so number and also asking revenue receipts and directly is asking that what is the revenue deficit. Clear? The following statement. So revenue deficit, you have an idea. Revenue deficit is equals to revenue receipts minus revenue expenditure. So revenue receipt is 80,000 crores and revenue expenditure is 60,000 crores and clearly mentioned that 20,000 is your revenue deficit. Clear? The option 1 is right. Then he has fiscal deficit. Clear? Fiscal deficit, see any economy fiscal deficit is nothing but borrowings of the government. Fiscal deficit. So I think initially if you see this question you may get a confusion. Fiscal deficit formula you will write and you will try to identify all the the problem, but it is not possible like that. So friend, fiscal deficit is nothing but total borrowings of the government. How much government is borrowing one particular financial year, that reflect the fiscal deficit. Clear? The total receipts minus total expenditure, exclusion of borrowings. Clear? So that's the reason fiscal deficit is nothing but total borrowings of the government, total liability of the government. So clearly mentioned in the question, total liability. Clear? The government budget also shows borrowings is 10,000. So that fiscal deficit is 10,000. Statement 2 is also right. Statement 3 is the primary deficit. What is this primary deficit? Clear? Primary deficit is nothing but fiscal deficit minus interest payment. Fiscal deficit minus interest payment. Clear? Clearly mentioned fiscal deficit is 10,000. Clear? So I am writing here 10,000. Clear? And interest payment is 6,000. Then 4,000. 4,000 is your primary deficit. So 1, 2 and 3, the 3 statements are right. See, usually in UPSC, they'll ask the, they have clearly mentioned the question in earlier prelims exam, the equations, but this year numerical values. So while you are reading in economy, you must require the logical conclusions and as well as the equations and as well as some numerical knowledge, not required the basic core, the core background of the Indian economy. You must require these two kinds of basics, then you are able to answer this. So the first answer is 1, 2 and 3, friends. Clear? Easy to understand this. Second thing, friend, second question, try to understand. The second question is, country fiscal deficit stands at 50,000. Country's fiscal deficit stand at 50,000 crores. It is receiving 10,000 crores through non-debt creating capital receipt. The country's interest liability is 1500 crores. What is the gross primary deficit? See, the question is simple. On primary deficit, two questions given in the UPSC Prelims 2025. See, the primary deficit is nothing but gross primary deficit formula, fiscal deficit minus interest payment. Clear? Already mentioned fiscal deficit 50,000. 50,000 minus, the 1500. Then the option is 48,500 crores. So statement 1 is right. So these two questions are directly relates to the fiscal policy. The fiscal policies, the indicators of the fiscal policy, basically the deficits. Clear? So the two question directly relates it. I hope you have done the right answer. Let's move to the third question, friend. See, third question relates to what See, the following statement with recommendations of the 15th FC. 15th FC. Before year, there was a question on 15th FC. Again, the question was repeated in this 2025 prelims exam. So, friends, here, the 15th Finance Commission, the factual, the data, if you refer the PIB or if you refer the, direct website of the 15th Finance Commission report, if you know the highlights of the 15th Finance Commission report through PRAs and all, you are going to get this question. So, this is very easy for the aspirant, but only factual data. So, in general, what happened in UPSC Indian economy, the student give priority for concepts and applications. The student least concerned about the numerical value. Even UPSC through this question clearly shows that we are going to ask the questions on numerical values also. So, while you are giving priority for the preparing for the next year, you should give priority for both concepts as well as here data. So, there is no certain theory, no certain logic. Similarly, the questions comes in the next year. Anytime this rally will be break. So, aspirant give priority for this. See, the question is clearly mentioned about factual, the question. See, recommended grants for 4,800 crores for the year 22 to 25-26, that is education. See, 15th Finance Commission has allocated around 10.15 lakh crore grants for the, especially the different kinds of grants. Beyond this, 41% devolution from the central taxes to the state, that is, vertical devolution. For horizontal devolution, they have taken different criterias. Beyond that, 10.15 lakh crore around, for the various grants like revenue deficit grants, local body grants, disaster management grants, and also sector specific grant and also state specific grant. In sector specific grant, clearly mentioned, education related 4,800 crores. 45% of the net proceeds of the union taxes are to be shared with state. Wrong, because 41% they are sharing with the state and 1% newly formed Jammu and Kashmir and Ladakh UT. So, first time 1% of the central tax revenue is devoluting to the Jammu and Kashmir and Ladakh. So, 41% absolutely you can eliminate this, and elimination round you can eliminate this particular question, because while you are answering UPSC prelims exam, you must know the the elimination process. Clear? Right. See, 45,000 crores are to be kept as a performance based grants for all the state carrying agriculture reforms, right? They have taken various components for allocating grants to the sector specific grant. One among is agriculture and education, 45,000. So, these two are factual basis. Clear? So, the option 1 and option 3. See, select the correct answer using this code, as well as it reintroduce the tax effort to the criteria reward to fiscal performance. Yes, definitely. What efforts states have been taken up to increase the tax, the income for the local bodies of the state, etc., is one of the key criteria under the horizontal devolution. Earlier the population was the major portion for the chunk portion for sanctioning the grants to the states, but now they have taken the criteria for devolution of central taxes to the state is tax effort. What tax effort has been kept by the state for collecting revenue, that they have taken into consideration. So friends, the first and third and as well as fourth are the straight factual information from the 15th Finance Commission. If once a cursory look on these recommendation, you are in a good fair enough to be answer this. So first and third and fourth, clear? First, third and fourth is the right option for your examination. Clear? First C, option C. See, first is right, third is right. Clear? First is right, as well as what here, third is first is right. First option is right, first statement is right, third statement is right, and fourth statement is right. Okay, first, third and fourth. So this is the right option. Clear? This is 15th FC. Now 16th FC also appointed. Clear? Now friends, so there is a question relates to the monetary policy RBI. I found this question because payment system, RTGS and NEFT. Clear? RTGS and NEFT, clear, real time gross settlement, and the NEFT, clear. See, these two are the payment system. NEFT and RTGS. Clear? See, see, NEFT and RTGS have, RTGS, the settlement time is instantaneous, while in the case of NEFT it takes some time to the settle payment, right? Absolutely correct, because RTGS immediately happened, real time settlement. NEFT will take certain time. The second aspect, you see, RTGS, the customer is charged for inward transaction, while it is not in the case of NEFT. No friend, because both are chargeable. That's the reason, the point you understand, the statement 2 is wrong. The statement 3, operating hours for RTGS are restricted on certain days, while this is not true in case of NEFT. No, there is no timing for this. 24/7 and RTGS and NEFT maximum the days have been performing in the banks itself, and if you want to do it in the bank hours you can do, and beyond the bank hour is also the provision is there. So that's the reason RTGS and NEFT, the statement 2 and 3 is wrong, the only one statement is correct. Clear? So this is the point, you have to understand this. Clear friend? Now come to the point. Consider the following statement with respect to Pradhan Mantri brainchild model, and it's a very great scheme for the renewable energy, the extension purpose, that is Pradhan Mantri Surya Ghar Mufti Bijli Yojana. So this question exactly from the union budget, they have stated in the union budget, and as well as the union budget 24-25, and as well as the if you go to the renewable energy ministry, the program is clearly mentioned. So the state question, factual question again, see there is no application regarding this. PM Surya Ghar Mufti Yojana, it is solar energy, right? The target installation of 1 crore solar rooftop panel in the residential sector. Second, the Ministry of Renewable Energy is impart training on the installation operation is right. Aim to create more than 3 lakh skilled manpower through fresh skilling and upskilling under the scheme component capacity building. So 3 options are right friend. So option 1 is right, option 2 is right, option 3 is right. So budget speech, if you read the not this year, the previous year budget speech, if you read, they clearly mentioned these 3 objectives. Clear? So this is what the Indian economy schemes related the question. Now this is another the significant the area for the prelims exam in economy as far as the international financial institutions are concerned, which we discussed in the international trade external sector. See, if you consider this IBRD, clear, if you consider this IBRD in International Bank for Reconstruction and Development 1945, after the Bretton Woods Conference, the main reason to establishment of IMF to look after the BOP, the main reason of establishment of IBRD to reconstruct to ravish the international economies after affected Second World War. See, the point is it provide loans and guarantees to the middle income countries, absolutely right. Low income as well as middle income. Middle income is a country, right? It provide the financial assistance and also single-handed to help the developing countries to reduce poverty. So October 17, World Bank celebrated as a World Poverty event, releasing the poverty estimations. Clear? So the point is these two statements are absolutely right. When you come to the third statement, friend, it was established to help Europe to rebuild World War II. No, not Europe, even the Australia, even in the America, even in the Asia. So any country, every nation's affected, vandalized after the Second World War, then to reconstitute it, reconstruct it, they ravish the Second World War, the establishment happened. So that, friend, the option 1 and 2, they absolutely right for this. Clear? This is the easiest question as far as the international economy is concerned. Right? Then next we'll move to this. Already I explained this. Right, friend? Now we'll move to the, yes, the national, right, see, the point you have to understand, this is another important concern regarding this not correct is asking. Which of the statements are not correct regarding this, friend, right? Only one statement is correct regarding this, because as per economic survey, if you read this economic survey in the year 2023-24 economic survey, the previous year economic survey, if you read, you will find out this question, right? Indian National have prepared the national renewal plan to correct future by 2028, I think 2030. Kavach is an automated train protection system developed in collaboration with Germany. No, this is Make in India project. Kavach system consider RFID target fitted to the track and station section, right? The statement 3 is right. He is asking question which is not correct. First you have to identify it. So 1 and 2 is not correct. This is directly from the national, the railway plan. Clear, friend? Right. Now we'll move to the next question. Just you can check. Consider the following activities: production of crude oil, right? Production of crude oil and refining. Yes, we'll move to the another area to discuss this. Clear, right? So with reference to the investment consideration, the following. With respect to the investment consideration, the following. See, there are two kinds of the investments in India. One is conventional investments. Clear? One is conventional investments. As well as when conventional investments are not giving proper returns, then we have to move alternative investments. Conventional investment like equity, that is bond, okay, equity bonds, and as well as the debentures, which are debt instrument, and somewhere it is a cash depositing in banks. This comes under conventional instruments. But conventional the instruments are not yielding high returns. You have to take a risk. This is available for the individual investors, but some of the institutional investors like FII or RII, retail investors. The people who are investors, they'll move to the alternative investment like mutual funds, like hedge funds, like venture capital fund, like seed capital fund, clear, or insurance fund like REITs, InvITs, etc. These are all comes under infrastructure funds, pension funds. So we have different funds which is related to the alternative investment. See, alternative investment is managed by an expertise individual. Basically, the back of the investment funds maintained by an expertise muscle. So that's the reason that people are shifting to the alternative investment who don't want to be take any much risk. Like infrastructure REITs and InvITs, a very big infrastructure boom, and SUTI, special undertaking of Union Trust, the Trust of India, United Trust of India. Like any funds which is related to the long term and even the backup by the expertise muscle, that is the investment comes under alternative investment. So as far as the capital market is concerned, see the bonds and as well as the stocks related to the conventional sources, and hedge funds and venture capital both related to the the alternative investments. So only 2 is right option. Hedge fund managed by an expertise muscle, venture capital, the capital which is relates to the pipeline to the direct the startups, the people who invest in startups. It's a long term the nature, and then particularly these 2 investments mostly channelized to the institutional investor rather than individual investor. Clear? So this is the point, the hedge fund and venture fund. So this is very easy to identify the task, friend. Clear? Right. One more, the question relates to the money market, right? The question is like this, friend. Which one of the following is a source, right? See, which one of the following is a source of the Reserve Bank of India to get revenue? So RBI basically is a non-profit organization. It is an apex bank to look after the entire monetary system. See, what kind of sources of the revenue to the Reserve Bank of India, which have been explaining in the monetary policy when we are dealing the RBI functions. Usually I discussed in the class the number of sources the RBI is getting revenue through internal sources as well as external sources. See, the point one is buying and selling of government bonds. Definitely the RBI generate the revenue with the form of rate of interest and the service income. Buying and selling of foreign currency, definitely RBI is getting rate of interest. That is certain income government is getting of these 2. Pension fund is managed by PFRDA, that is not by RBI. Lending private companies not by RBI, lending by commercial bank, because RBI is a credit regulator, banks are a credit creator. Usually corporate certificates of deposit, even the commercial papers, and even lending to the merchandise purpose by the scheduled banks, not by Reserve Bank of India. The point try to understand, pension fund, these 2 are not. Printing and distributing currency notes, RBI gets revenue, that is called seigniorage. Seigniorage, the revenue of the Reserve Bank of India by currency printing. Say for example, today the highest denomination of currency is 500. Assume the printing currency is the 50 rupees cost, 450 is RBI generating revenue. This is impractical. We cannot say that exactly they are getting this, because the cost of ICAR, incremental capital output ratio to manufacturing of the currency, whether it is Bharatiya Reserve Bank Note Mudran Private Limited of Mysore or Security Printing Corporation of India, that is Nasik, as well as the Devas. Clear? Suppose their expenditure of the making currency is lesser under Make in India process, their seigniorage will be increased. Whatever revenue Reserve Bank of India is generated in one financial year, with the request of the committees or self, they are having different buffering, they will maintain. The excessive funds when the Reserve Bank of India is having, usually they will transfer to the Government of India. The chunk portion recently transferred, this all of you know. But based on the current, they have asked the basic of this question. So 1, 2 and 4, these options are right, friend. Right, friend. Seigniorage is very important concern. See, our banks are depositing money with RBI, that is called CRR. Of course, CRR is RBI will not pay any rate of interest to the banks, that is negative carry to our banks. So friends, when it is negative carry, Reserve Bank of India is gaining that portion. Say for example, 100 crores State Bank of India is having, 4% RBI is State Bank of India kept with RBI. This 4 crores is a negative carry to our banks because RBI did not pay any rate of interest. But that 4% is a income to the Reserve Bank of India. When risk happened, when contingency generate, so situation will be handled by the Reserve Bank of India by inviting to the big institutional players like the commercial banks or any other institution. It's not a big deal to the RBI to, again, money is required. So indirectly that money is RBI uses for its own purposes. So in that consequence, the RBI is getting revenues. RBI is also taking up certain projects in the international market for construction of housing in Sri Lanka, construction of the projects in international economy. So that's the reason they are getting certain returns in the line of credit. So these are all the sources of RBI. So here the question is simple to answer. I hope maximum the student have done this in a proper and genuine manner. See, this is also very interesting and very simple question. Direct connect to our class notes where we have discussed in the UPSC exams, right? See, the point is with reference to the government of India, consider the following information. See, organization director of enforcement, when I am dealing the fiscal policy, the before we are entering into the fiscal policy, I drawn the 6 the departments of the Ministry of Finance. Under each department, what are the institutions are working. So this is my the basic the nature to be explained in the class, this particular the format. So friends, here the Directorate of Enforcement ED is working under Department of Revenue, not under Security Division of the Home Ministry. Clear? The question is, Directorate of Revenue is working under Department of Revenue, and Directorate of Revenue Intelligence to be the identify the money scams and as well as the money frauds. The duty is working under the Department of Revenue, the Ministry of Finance. Then Director General of the System and Data Management, yes, Department of Revenue, which is officers for better training, and also 2 options are right, friend. So direct questions relates to your ability. Fine. And one more question relates to this Reserve Bank of India. See, the question is Reserve Bank of India. See, Reserve Bank of India mandates all listed companies to submit a plan called BRSR. What is this BRSR? BRSR is nothing but Business Responsibility and Sustainability Report. BRSR, Business Responsibility Sustainability Report, because India has given a target by 2070 net zero. Climate financing or carbon financing is one of the mandatory tasks to the all companies which register under Company Acts, and also the companies which are listed to the SEBI for procurement of the finances. Green finance, climate finance is one of the essential component nowadays after these SDG goals have been implementing. So every country wants to be protect their environment. The sustainability is one of the regulation nowadays to the companies. Green strategies, green initiative is one of the the stupendous task to the SEBI and RBI to follow this. But RBI has taken number of measures to be promote the green financing, whereas SEBI is a mandatory this. That's the reason RBI is not related to submit this, because RBI is not a commercial venture. Whereas the Indian company is submitting BSRBs make disclosure in the report largely what non-financing. So that's the reason this is the correct, because the companies has to say that these are our measures towards environment protection, these are our measures towards protecting biodiversity, these are our measure towards protecting ecological balance. We are shifting our economy from fossil fuel to non-fossil fuel sources, a pollution economy to non-pollutant economy. So these are all the companies has to be assured it. That's the reason statement 2 is right, friend, as far as the concept is concerned, right? See, another significant concept you have to understand. Consider the following statement 1, statement 2. The statement 1, you see, the Indian income allied agriculture activities like poultry farming and wool rearing in rural areas exempted from tax. No, friend, as per as 1961 income tax is concerned, which is recently amended in 2024, the basic point you understand, agriculture is only a sector exempted from taxes. Pure farming like crops, not poultry, not livestock, not fisheries, not aquaculture, not forestry. That's the reason the statement is wrong. Statement is wrong. Clear? The statement 1 is not correct, but statement 2, Indian rural agriculture consider capital, whatever the capital asset, whatever the capital gain. What is the meaning of this capital gain? You see, you purchase agriculture land for 1 lakh, selling in the market for 2 lakh, gain is 1 lakh. On 1 lakh, there is no capital gain tax. See, capital gain tax exempted on agriculture assets. When we are discussing about the fiscal policy with respect to the taxation, we emphasize that particular point on the agriculture, no capital gain tax apply. So the question straightly asks, friend, rural agriculture land is not considered as capital asset under the provision, right? See, this is statement 1 is not correct, but statement 2 is correct. Clear? Logical answer. And if you have the awareness about the taxation, you answer. See, consider the following statement. India account for very large portion of all equity option contracts traded globally, does that great boom? Yes, the option is right. The option is right. India accounts for a very large portion of all equity option in the world, right? India stock market grown recent past, overtaking Hong Kong. Yes, the point is what US, China, Japan, India. US, China, Japan, India. We are largest, fourth largest. If you read Economic Survey 2023-24, they have written this ideology. Ananta Nageshwaran has kept this ideology in the financial market. See, next there is no regulator. Almost, the previous, the chief of SEBI and Mihir Kant Pandey, present chief, and Madhavi Buch in the earlier chief, always the emphasize that statement relates to the we need a good regulatory system to protect the small investor, retail investor. But as far as SEBI is concerned, today we do not have a proper the statutory regulation mechanism on the small investors. So the statement third, there is no regulatory body either to warn the small investor about to risk option or unregistered to financial advisor in this regard. Though we have the beta version, but we do not have any proper regulatory mechanism. So option 1 and 2 is correct. Option 3 is not correct, because option 3 is not correct regarding this. No regulatory body either to warn the, which of the above statement given is correct? 1 and 2 is correct. There is no regulatory body either to warn the small investor about to risk option trading to act on unregistered financial advisor to this. No, though this option is not considered here. So 1 and 2 is correct here. There is no regulatory body. Many times they said we do not have any the regulatory body. See, there is no regulatory body either to warn the small investors about the risk options trading to act an unregistered financial advisor in this regard. No, so option 1 and 2 is correct regarding this particular element, friend. Clear? Right. So now you have to understand the another the segment. Clear? This segment you see. So Rashtriya, consider the following statement about Rashtriya Gokul Mission. So Gokul Mission point of view, both statement are right. Very simple. Important for upliftment of rural poor, low producing indigenous animal. Protecting the the cows, protecting the cows, and as well as what initiative to promote indigenous cattle and buffalo rearing, conservation of the scientific and holistic manner. Both options are right. Kamadhenu project, many of the states are running this particular Kamadhenu project. Clear? Right? See, consider the following statement about turmeric board in the 2022-23. India is the largest producer and exporter of turmeric in the world. More than 30 varieties of turmerics in India. Maharashtra, Telangana, Karnataka, Tamil Nadu, major turmeric producers in the world. Option is right. 3 options they have given. The 3 options are right regarding this particular elements, friend. Clear? Fine. So these are the statement. Then next come to this circular economy. So this is our favorite spot in the initial classes. I explained this circular economy. Circular economy ka meaning is what? Waste to wealth. Waste to wealth. Creation of waste to wealth is called circular economy. If you read the budget speech of the Nirmala Sitharaman just a couple of years back, you may get clarity on this circular economy. Waste to wealth. Because recycle, reuse, and reduce, and these are the basic pillars of this particular waste circular economy. Circular economy reduce the emission of greenhouse gas. Absolutely right. Circular economy reduce the use of raw material as an input, because reduce, reuse, refuse and reuse concept is there. Reduce, refuse and reuse concept is there. So that's the reason this is reducing the raw material. Circular economy reduce wastage in the production process. Both statement 2 and 3 are correct, and both of them explaining statement 1. Clear? So this is directly basics question. So directly relates to your the exam, because always before starting my classes I will take around 15 classes on the basics economy. So there I explained lot of types of economy, including colors economy. So this is the the emphasized one and already reflected. Clear? UPSC is basic focus on these types of economy: care economy, gig economy, and as well as the circular economy. There is a chance to be asked orange economy for the next the exams. So the point you understand. Clear? So this is also relates to your the economic side. Consider the following statement. See, the capital receipts create a liability. Clear? Capital receipts create a liability cause of reduction in the assets of the government. As yes, capital receipts are liability. Clear? If we take capital receipts, there are two kinds of capital receipts. One is debt capital receipts as well as non-debt capital receipts. In debt capital receipts, borrowings and other liabilities come. In non-debt capital receipts, two are there. One is disinvestment. Clear? Disinvestment is a non-debt capital receipts, and as well as monetization. Disinvestment as well as monetization, national monetization pipeline. It is also comes under non-debt capital receipt. Next, recoveries of loan. So recoveries of loan also comes under non-debt capital receipt. But debt capital receipt create a liability or cause reduction in the assets. So usually I explained when I am dealing this debt capital receipt, so the option 1 is correct. So debt capital receipt is a receipt the government tomorrow has to be reduce their assets, or tomorrow they have to sell their properties to repay off this. So it is nothing but borrowings. Borrowings and disinvestment are the capital receipts, right? Borrowings and disinvestment. Interest receipt on the loan creates a liability. No, interest receipt is an assets. Interest receipt and assets, because you deposit money in the bank is giving the rate of interest, it is an asset for you. The bank, it is a liability. So how it is a liability to the government? It is asset to the government. So that's the reason option 2 and 3. So logical question, friend. If you clear in the classroom, I hope you understand this in a proper and genuine manner. Clear? So these are the questions relates to your Indian economy. These are the questions relates to your Indian economy. Clear? See. Okay, right, friend. So you try to understand the solar rooftop. I explained already. Solar rooftop I explained. Provide guarantee to the low income country I explained. Clear? So these are the related questions. So these are the questions we have as far as your UPSC exam is concerned. Clear? See, if you check the previous questions, clear? If you check the previous questions, similar dimensions they mentioned in the exam, similar dimension they mentioned in the examination. One question relates to this, and fiscal policy and 15th Finance Commission. Clear? 15th Finance Commission. Yes. Currency, Reserve Bank of India, yes, capital gains, yeah. So there is a one question related to this. I think the question is missing there. The question is, consider the following statement. 1. As regard to returns from an investment in a company, generally bond holders are considered to be relatively lower risk than stockholder. So friends, try to understand this. See, bond holders, always see the bond holders. So these bond holders are less risk compared to the stockholders. Okay, stockholder risk levels are high. If you check the risk of the individual, suppose if you go to the bond primary market, like bond holders are less risk, because bond returns are assured. 5%, 10%, 10%, like treasury bond, sovereign gold bond, masala bond, whatever the bond is there, that is mentioned as a rate of interest. So volatility of the market did not consider. That's the reason less risk if you purchase the bonds. Then if you go to equity, it depends on the subject to the market risk. That's the reason lot of risk. Statement 1. Statement 2, if you check in statement 2, bond holders are lenders to the company, whereas stockholders are the owners. Yes, the bond holders are the lenders, because I invested in suppose municipal bond. I invest in municipal bond. Greater Hyderabad municipality, or greater the future city, they have formed one the local body, urban local body. Suppose they have issued the municipal bonds. I invested in municipal bonds. See, when I invest money in municipal bonds, I become a lender. Borrower is the municipality. Whereas stakeholders, see, if you purchase a bond, it will become a owner. If you purchase a stock, it will become a owner. So the statement 2 is also right. Statement 3, for repayment purpose, bond holders are prioritized. First prioritize bond holders. First prioritize bond holders, but stockholders, after prioritize, after all expenditure completed, then finally after all expenses, payments, first they will pay, the bond holders, then they will pay, the right issues, and they will pay, the shares. Like after payment of all the shares, final, the stockholders are going to be paid. So that's the reason statement 1, statement 2, statement 3 are right. See, both statement 2 and statement 3 are correct, and both of them explaining statement 1. Yes, absolutely, the first option is right. So these are the questions which relates to the Indian economy. I hope all the questions, my personal understanding is, if you are attending classes, if you are listening classes, clearly you understand in the classroom, because economy is a subject maximum can be complete in the classroom itself. The maximum student miss this basic logic, and they'll try to purchase the different books and different material, different test practices, and they'll individually read in the study hall. No, friend, you should give priority for the classroom. Because economy is a subject depends on the faculty dealing. If faculty can explain the things in a proper manner, the institute can be give lot of hours, teaching hours to the economy faculty. So definitely the faculty will be give clarity on particular the subject. If you have a clarity on the concepts, you understand well, then you can be read any other aspect, that is okay. But without attending classes, don't depends on the material, don't depends on the handouts, don't depends on the just the PYQs. First you understand the subject. You need to understand the economic maximum preparation we can be complete in the classroom itself. It is not a subject that individually the student can be read by sitting in isolated. It is not possible, friend. So hope you will carry forward these question, the trend for the next preparation. Make your preparation thorough for the next, the examination. Who qualified in the prelims, give 100% priority for the mains. And also by seeing this question paper, don't forget to give priority for your basics along with your current affairs. In UPSC, what happened? Based on the current affair, they will ask the question on basics, or based on the basics, they will give the questions on current affair. It is most unpredictable, the questions. But anyhow, economy did not trouble earlier, but this year is also did not trouble if you have a conceptual clarity. Clear? So this is the explanation on the Indian economy component of UPSC prelims exam.